Imagine hitting rewind on the last 25 years of the global economy. It's like watching a high-speed cinematic montage, right? The sheer speed of change is absolutely dizzying. We went from this highly unified, super optimistic system to a deeply fractured world in what feels like the blink of an eye. In this explainer, we're going to rewind that tape and see exactly how the world economy changed forever.
Okay, picture the year 2000. At that time, the United States was sitting right at the absolute peak of its economic supremacy. I mean, the US produced an astonishing 30.4% of everything the entire world made. Just think about that for a second. The US dollar was the totally undisputed currency of international trade, debt, and global ambition.
And get this, at that exact same time, China's total economy was actually smaller than Italy's. Yeah, Italy. While the West was busy building global empires, China was economically smaller than the country famous for pasta and the Leaning Tower. The economic map looked completely different than the one we navigate today, and the balance of power was heavily concentrated in the West.
To top it off, a barrel of oil cost just 28 bucks. That's what, the price of a couple movie tickets today? This incredibly cheap energy set a baseline of stability and predictability that absolutely nobody, not governments, not Wall Street, nobody, expected to shatter. It literally felt like the global economy had finally been solved.
Chapter 1: The Peak of American Dominance and Writing the Rules.
So this whole era was governed by something called the Washington Consensus. It was this dazzlingly confident belief that global integration was working perfectly. The big assumption here was that open markets, free capital flows, and liberal democracy weren't just, good ideas. They were the inevitable, final destination for every nation on Earth. And honestly, looking at the soaring stock markets back then, it was pretty easy to believe.
Chapter 2: China rewrites the map, becoming the factory of the world.
What happened next was the fastest industrial transformation in human history. When China joined the World Trade Organization back in December 2001, Western economists were celebrating. They expected cheaper goods and a rising middle class. But instead, they got a tidal wave. Between 2001 and 2010, China's manufacturing output exploded, and its share of global exports basically quadrupled, going from just 4% to nearly 14%, and it just kept climbing. But here's the critical piece that all those fancy economic models totally missed: the China shock. Sure, we got cheaper goods, but this massive structural shift permanently altered towns and livelihoods across the West. Economists estimate this shock wiped out up to 2.4 million American manufacturing jobs between 1999 and 2011 as global production rapidly shifted overseas.
See, the West had bet that economic integration would automatically moderate China's political ambitions. But actually, scratch that. China leveraged this unprecedented economic rise to become an entirely new global power. Through massive, sprawling infrastructure projects like the Belt and Road Initiative, they built immense global leverage, eventually becoming the largest trading partner for over 120 countries. The world didn't just get a new factory. We got a formidable new architect of global trade. Chapter 3: The Crash That Changed Everything and the End of Easy Money. So, through the early 2000s, American banks were busy packaging subprime mortgages into securities and selling them globally. They were absolutely convinced they had engineered risk right out of existence. Spoiler alert, they hadn't. When Lehman Brothers collapsed in September 2008, credit markets completely froze. The impact was violently swift. Global trade contracted by over 12% in a single year. That was the sharpest, most dramatic drop since World War II.
To stop a total catastrophic collapse, central banks basically did the unthinkable. The free money era began. They dropped interest rates straight to zero, and actually below zero in parts of Europe. They printed trillions of dollars, euros, and yen to keep the system afloat. And while asset prices soared, making housing wildly expensive for everyday people, wages just stagnated. We essentially trained an entire generation of policymakers and investors to believe that money was, free.
Chapter 4: The Decade of Shocks, Bringing Pandemic and War.
Then, these structural shocks started accumulating rapidly, almost like a cinematic sequence of cascading crises. In 2020, COVID-19 hits, collapsing fragile supply chains overnight. To cushion the blow, governments injected a staggering $16.9 trillion globally. But, with all that freshly printed money, chasing too few goods in a broken supply chain, inflation violently wakes up. Then, early 2022, Russia invades Ukraine, throwing energy markets into total chaos. By June 2022, U.S. inflation skyrockets to a 40-year peak of 9.1%. In just 3 years, the global economy absorbed more structural shocks than in the previous 20.
The crucial takeaway here is how this completely shifted the way the world operates. Back in the 2000s, the ideal was the just-in-time supply chain. Super efficient, frictionless, made everything cheaper. But as the pandemic proved, it was catastrophically fragile. One node fails and the whole system shudders. Now we're living in the 2020s reality, redundant supply chains. They're messier and for sure they're more expensive, which translates directly to higher prices for you at the checkout counter, but they are geopolitically secure. The world was literally forced to trade completely differently.
Chapter 5. The New World Economic Order and the Return of Policy.
Economists have a term for this systemic shift, deglobalization. Now, don't misunderstand the term. The world didn't just stop trading. Instead, it's a defensive rewiring of the entire planet. Nations are trading much more selectively now. They're prioritizing their own national and geopolitical security over that old 2000s dream of frictionless open borders.
And the policy response has been absolutely massive. The United States officially abandoned 40 years of its own free market consensus. Washington is now injecting roughly $2 trillion, yes, trillion with a T, into directed industrial spending over a decade. Things like the CHIPS Act are designed to bring vital manufacturing, like the semiconductors that run our phones and cars, right back home.
Europe mirrored this incredible urgency too. After the invasion of Ukraine, they realized the immense danger of their energy dependencies. So they radically rewired their entire energy economy in under 2 years. They slashed their reliance on Russian gas from around 40% in 2021 down to less than 10% in 2023. They did this by rapidly building new liquefied natural gas terminals and massively accelerating renewables.
At the same time, the rest of the world isn't just sitting still. The Global South and the BRICS bloc, Brazil, Russia, India, China, and South Africa, started rewriting their own terms. While the US dollar is definitely still dominant, its grip is loosening. The dollar's share of global foreign exchange reserves has slowly eroded down to 58%. Power is undeniably becoming more multipolar.
Chapter 6. The Reckoning and What Comes Next. As we look toward 2026, the global economy has changed more in 25 years than it did in the previous 50. The Washington Consensus? Dead. The era of zero interest rates? Completely over. And this brings us to a really profound truth. The global economy was never a system. It was always a negotiation. That frictionless, borderless world everyone envisioned back in the year 2000 was kind of an illusion. It was just a temporary set of agreements. And today, that ongoing negotiation has entered its messiest, most consequential round yet.
So we're now looking at a deeply contested future, with artificial intelligence rapidly rewriting the economics of human labor, climate change fundamentally shifting geography and resources, and great superpowers aggressively battling over trade and secure supply chains. In this profoundly rewritten global economy, who actually wins? It's the defining question of our time, and the answer is being actively negotiated right now. Keep an eye on these structural shifts because they are absolutely going to dictate the next 25 years.